Hello everyone, and welcome back to another Stock Unlock video. In today's video, we are going to be talking about 5 easy ways that you can improve your own investing. And the first one is to know what you own and why you own it. This is actually Peter Lynch's Rule 1 for investing. He thought that this was the most important rule for investors to know and understand. And this is because if you know the stocks that you are invested in, then you will not panic or be fearful when your stock prices fall, because, well, they will. If you are an investor in the market and you plan on being invested in the stock market for the next 5, 10, 15, 20 years, then there will definitely come a time where the stock market crashes and stocks are going down 20, 30, 40, 50%. If you do not know what you own and you don't know why you own it, and you're basically just buying a stock because you think that, well, hey, this sucker is going to go up, or this person told me that this stock was a good buy and I'm going to make a ton of money on it over the next 3 months. Well, what happens when that stock starts to go down? Again, basically every single stock in the market is going to go through a period where it goes down on you. And you have to know what you own and you have to know why you own it, because when that happens, you will not be fearful and you will actually see the stock market volatility as an opportunity to either increase your position or just downright ignore it. Buying a stock just because you think it's going up, or buying a stock because someone says that it's a good buy, is not a good enough reason. You have to know for yourself why you own that stock, what is your thesis, and what are you going to do if that stock falls 50%. One little piece of my own personal investment process that I've implemented is asking myself before I buy any stock, if this stock falls 50%, if the stock literally loses half of its value, how am I going to react? If that stock is going to lose 50% of its value and that will cause me to worry or cause me to want to sell that position and I don't see it as an opportunity, then I should never buy that stock and I should never own it in the first place. And that all stems from simply, again, knowing what you own and why you own it. So now let's move on to the second tip that can improve your investing really easily. And this one is to understand that you own part of a business when you buy a stock, and that a stock is not just a number that bounces around on a screen. To simplify what I just said, a stock is not a number that bounces around on a screen, and a stock is ownership in a real and tangible business. The best investors out there, like Warren Buffett, Peter Lynch, Ray Dalio, are constantly preaching that you should look to the underlying business to make investment decisions and not at what the stock price is doing. Because the reality is, no one knows what the price of stocks is going to do over the next 1, 3, and 5 years. So to make decisions based on something that is totally unpredictable means that we will ultimately be making decisions based on total unpredictability. Our decisions will ultimately become very unpredictable and irrational. So whether we want to buy or sell a stock, really what the ultimate decision should come down to is whether we want to buy or sell that business. There's actually a quote directly from The Intelligent Investor, which is said to be the best book on investing ever written, that says stocks do well or poorly in the future if the businesses behind them do well or poorly. Nothing more and nothing less. And we can actually head over here to Stock Unlock and I can show you exactly what this looks like in real life. So let's head over to Stock Unlock's freeform tool right here. And we are going to go and take a look at this stock right here, which is Constellation Software. What we're going to do is pull up the company's free cash flow, which is essentially how much cash the business actually generates and how much cash it can return back to its shareholders. Then on the same chart, we're going to add in the company's stock price. And what we can see right here is that as Constellation Software's free cash flow grows, so does its stock price. So essentially, as the amount of money that the underlying business can generate continues increasing, the stock price follows. And this is exactly what the Intelligent Investor means when it says stocks do well or poorly in the future if the businesses behind them do well or poorly, nothing more and nothing less. Let's take a look at another example right here. And let's go to IBM. And let's remove Constellation Software from this chart. And right here, we can see that IBM, or International Business Machines, free cash flow peaked right here in 2009, and it's just been incredibly volatile. It has been all over the place. Again, this is represented by this blue line here on our freeform tool. Now, what we can see is that the stock price follows the company's free cash flow. So since IBM's free cash flow has not been growing over the past 15, 17 years, neither has its stock price. When you're investing in a stock, you really have to look at the business behind the share price and make investment decisions based on the business and not based on what the stock is doing. Again, you can very clearly see that IBM's cash flow is not growing, so the stock price does not grow either. If we go back over to CSU.to, this company's free cash flow is growing, and since the free cash flow in the underlying business is growing so well, so does its stock price. Tip number 3, moving on, is to avoid hot stocks and hype in the stock market. Over the past couple of years, there was a record amount of new investors to join the stock market and open up investing accounts. This led to a massive wave of retail investing and a massive wave of people here on YouTube making content about stocks. And what I noticed as a content creator here on YouTube is that there were a lot of channels coming on to the platform and just talking about the hottest stocks in the market that would get them the most views. So basically what I noticed is that if there was a stock that everyone was talking about, it led to more people talking about that stock, which led to more people talking about that stock. And it just led to like these select few stocks becoming incredibly hyped up, incredibly overvalued, and it just overall wasn't a very good thing. Let me show you a few of these stocks actually. One of them is Skillz. This stock was one that Cathie Wood was talking about here in 2021. It was actually a stock that Cathie Wood was buying in 2021, and it topped out at about $43 a share. Well, now the stock trades for $1.91, and we can see that the stock has lost basically about 96% of its value. So right here in 2021, everyone was talking about Skillz. Cathie Wood was buying Skillz. There was articles coming out. There were YouTube videos being made on this company, and it was just being hyped up, and the stock price was being pushed to the freaking moon. And you guys can see for yourself right here exactly how that played out for long-term investors. People were basically focusing on the hype. They were not taking a look at the actual business behind the stock price, and everyone was buying Skillz because they thought the stock price was going up. They were not buying Skillz because they thought that the underlying business was strong or, growing. If we actually head over here to Stock Unlock Insights, we can see that Skillz has a growth score of only 1.8 out of 5, which is on the low end. Skillz revenue is decreasing, its net income is decreasing, its free cash flow is decreasing, its book value, or essentially its asset value, is decreasing, and basically every metric that investors care about here in terms of growth is going down. So it makes absolute sense why the stock is falling, because the underlying business behind the stock price is, its business is declining. We can also see that Skillz profitability is a 1.9 out of 5, which basically just means that Skillz is not a profitable company. We can actually see right here that Stock Unlock tells us that Skillz is unprofitable, and in the past year, it lost $262 million. So this is a company right here that was being hyped up. It was a hot stock. It got a lot of attention. But when you take a look under the hood of the stock and you look at the actual business, there's nothing good about it, to be totally honest with you guys. Its business is declining, it's losing sales, and it's losing hundreds of millions of dollars. Yeah, if Skillz doesn't turn something around, then this was a really hot stock that I personally think is never going to get back to a $43 share price. It's got not very strong fundamentals. When you're buying these stocks that everyone is talking about, you're paying a premium on excitement. If people are, talking about a stock and it's really hyped up, then that causes a lot of attention to the stock. It pushes the stock price up, and you're paying not for the fundamentals, but you're paying for the excitement. That causes these stocks like Skillz to sell for massive premiums, and ultimately it leads to these stocks falling massively. By avoiding hot stocks and by just, you don't need to invest in the most exciting companies. Take a look at this. This is CNR.to. This is Canada's National Railway, Canadian National Railway. It's the largest railroad in Canada. It's got to be one of the most boring businesses you can think of. I mean, think of trains, think of railroads. That's what this business is, right? Well, since January 2000, this stock is up a massive, what is this? It's up like 2,700%. And if we compare the returns of Canadian National Railroad versus the overall S&P 500 index, it's up like 10 times, more than 10 times as much as the overall S&P 500. This is what I mean. You do not need to invest in the hottest stocks. You do not need to invest in the stocks that everyone is talking about. And you can invest in some really boring companies that have really strong underlying fundamentals and are really strong businesses. And you can massively outperform the market, and you can massively outperform those hot hype stocks. You just got to invest in fundamentally sound businesses that are going to continue growing over the long term. Let's move on to tip number 4 on how you can become a better investor. And this one is simply just to understand how to read companies' financial statements. Not knowing how to read a company's financials and investing in it is like investing blind. You really have no idea what it actually is you're investing in. Financials are like the language of investing. And if you cannot read financials, then you're just investing blind. And it's Absolutely crucial, you guys. I actually cannot express this enough. It is crucial to understand how to read financials. And let's take a look at Stock Unlock right here, because if we head over to Canadian National Railroad's financials, it's just a wall of numbers, right? And I understand this looks incredibly intimidating to a newer investor. You got your income statement, your balance sheet, your cash flow statement. There's literally hundreds of numbers and it's just overwhelming. I get it. So what we did here on Stock Unlock is we made a 3-part series, a 3-video series, where we go over the income statement, the balance sheet, and cash flow statement one by one. And I show you guys exactly what you got to look out for, some tips, the good things that you want to find, or some serious red flags that you can find in a business. Again, this wall of numbers is very intimidating, but there's a few key things that you have to look for. And by just understanding how to look for these few key things, you can avoid some seriously bad investments and you can find the best businesses that you can possibly invest in. Now, also here on Stock Unlock, we tried to make this whole process of reading financial statements even easier for you. What we did is we created this Insights tab. This is the tab that we referenced earlier on in the video, but it essentially takes all of the key fundamental metrics that investors care about, and we score them and we grade them for you. We report those back to you so that you guys do not need to dig through the company's financial statements on your own and basically be investing blind. Our insights right here, for example, we can see that Google has a profitability score of 4.4, so this is a very profitable business. It's also got a growth score of 3.8, which is on the higher end. You can see the revenue is growing, net income is growing, free cash flow is growing, assets are growing. So this company is growing and it's got a good growth score. You can also see that the financial health of this business is a 4.6 out of 5, which means that it is very financially sound and there's no risk of this business going under or anything like that anytime soon. So by taking a look at our insights, it's basically just a quick way to analyze the company's fundamentals, really easily see if the business is growing, if it's not growing, or if there are some massive red flags that you got to watch out for. Again, if we head over to Skills Insights here on Stock Unlock, and right here again, we can see that the company has a growth score of only 1.8, and there are some very bad things that we quickly highlight for you. So I would strongly recommend watching our 3-part series on how to read financial statements, and then sign up for Stock Unlock. It's totally free, and you guys can come and play around with our insights and get an idea of how to read companies' financials yourself. Now, the 5th and final tip for investors is simply to think long-term. I really hope that if you are investing in the market, then you're not really paying attention to what's going to happen over the next week, the next month, the next 3 months, the next 6 months, the next year, even the next 3 years. As a long-term investor myself, I am in the market and I'm invested in the market to be invested for the next 10, 20, 30 years. And this is also where you gain a massive edge as an investor, because when you start investing and when you start paying attention to the financial news, you're going to notice that basically everyone is focusing on, well, hey, how is this company performing right now? What is going to happen over the next quarter? Are we currently in a recession? Are we entering a recession over the next year? Or how is this business going to perform over the next year? Basically, what I'm trying to say is that the stock market and the financial world tends to pay attention to what's happening right now and over the next year. As a long-term investor who's focused on the next 10, 20, 30 years, I can use this to my advantage, because if people want to focus on, a company not maybe performing the best right now, but I think that it's going to perform very well over the next 20 years and continue growing, then that gives me an opportunity to buy that business or buy its stock at a cheaper price and benefit from its long-term growth, even though it's going through a period of unpopularity right now. By focusing on the long term, you can gain a serious edge in the market, because the market is full of people who are focused on the short term and are not truly dedicated to long-term investing. And as an investor, I'm serious, you guys, you absolutely have got to focus on the long term. Do not focus on what the share price is doing right now. Take a look at the businesses, focus on the underlying business, and make investment decisions on what you think that business is going to do literally over the next decades, over the next 10, 20, 30 years, and make your investment decisions based on that, because I can guarantee you probably 95 to 99% of the people in the market are not thinking that way. They may say they are, but they're actually not. And you can get some serious deals and some serious opportunities and a serious edge by just thinking long term. So those are our 5 lessons today, or not 5 lessons, but those are our 5 really easy ways that you can improve your own investing and become a better investor. If you guys enjoyed this video, then please remember to leave a like on it. Also subscribe to the channel if you want to see more stock market related content like this, stock market education, and just stock market tips. We are literally dedicated to building you into a better investor here at Stock Unlock, and If that's something that resonates with you, then please consider subscribing to the channel. Also, if you want access to Stock Unlock, there will be there will be a link at the top of the description. You guys can get a 7-day free trial. We're extending it to 14 days here very soon, but you can get a 7-day free trial by just entering in your email. You do not need a credit card, and you can come and play around with Stock Unlock. So yeah, it's a great platform. We're continuing to build it out. It's getting better every single day, and I can't wait to see you guys on it. Thank you guys again so much for watching. That's going to wrap everything up, and I really hope to see you all again in our next video.